Hi, this is Optimus Futures with a weekly roundup of key commodity and futures markets for our valued viewers. As always, please let us know in the comment section below how we did in this session, and if you have any questions relating to the analysis that we post here. So let's begin with our first market here, which is the light crude oil futures, December delivery contract being traded on the New York Mercantile Exchange. So we basically started the week off right over here at a very interesting point in the market, because if you take a closer look, we were basically straddled just under a major short-term resistance area as well as a major former support area. So we had instances when price bounced off of this area, previously held as resistance here, and we had an area around here, the 52.5 area, where price basically held as resistance in the past. So we opened up right kind of in the middle area, and which kind of explains why price was going sideways for the first day or so, constantly just bouncing off these lows over here, and initially just holding as resistance over here before it decided to just push through. Price was just constantly going in an upward direction and blew through even this former resistance area almost like a hot knife through butter. And we'll get into a bit why that happened and why that was kind of in the books if you had the eye for it. So let's just talk about the momentum the price was able to build as it was bouncing off these two short-term areas, while also creating consistent higher highs over here. Let's look at the fact that we just had no divergence whatsoever, as indicated by the RSI oscillator here, which once again suggests that price was accumulating the momentum that it needed. The other thing we need to really address here is that when price is approaching a very important point in the market, such as this major swing high over here, it's really important to see how price is approaching that area. So for example, if this is a resistance area, we need to be careful and watchful of how price is approaching this area. If it's making consistent higher highs in a nice rhythmic pattern as it approaches the area, that suggests there's a nice balance between buyers and sellers, and the buyers are just getting the upper hand here, which is exactly the kind of stuff you need to see if you're looking for a breakout of this area, as was in this case. On the other hand, it's kind of like counterintuitive to talk about it, but when you see a very sharp move headed into a significant area, such as a move like this, it basically suggests there's been no selling going on in this area at all, and that's usually a very good sign that the sellers are probably waiting in a block at some point in the market. And usually that's going to be the important area that's already on the chart and a lot of technical and fundamental traders are looking at. So in this case, we're seeing a sharp move through this area, possibly because price was able to make a really nice rhythmic movement here, where the buyers clearly showed that they were overtaking the sellers here, and the slingshot was getting ready to be released as price basically broke through the 53 round number area. Now, having said that, we shift to a higher time frame to look at potential areas where price can find trouble. We don't have very far to go. We have a very important area over here, which kind of stretches right back over here, and we're basically now heading straight into extremely important longer term swing highs and just highs in the market that we need to be really careful about. And once again, notice how price is making a sharp move through all the way to this area. A former example we can look at to make a stronger case of what we're talking about is the move right over here. So if you see, we barely had any major selling going on here, and the buyers were just consistently in power, especially as price closed in on this major resistance area. And that was likely because a lot of sellers were actually waiting for price to hit the 5,500 area over here, where you can see that they launched a big block of sell orders, and price just fell downhill. And we're seeing a similar scenario develop over here. It's not entirely similar, of course, because we've seen price actually gain momentum and muscle through all of these former areas as well. But you want to be careful, nevertheless, when price is heading into a major resistance or support area, with just one-sided dominant action. And that kind of brings us to the next point, that we're kind of expecting for price to really hold up at the 5,500 area, if not bounce off of it. Unfortunately, we don't see this strong move up to continue much further without losing at least some kind of momentum. We could eventually see price maybe push through, oscillate around this area a bit, gain more momentum before continuing on. That could be an option for sure. But what we're saying is we don't expect price to just continue to butter through all of these areas as it may seem, just looking at the strong momentum to the upside. Like we said, there's usually a very, very good reason why price is accelerating into a region, and a lot of times it has to do with a bounce or a reversal at the area, if you could put it that way. So let's look at the next market here. Okay, so we're looking at the S&P 500 E-mini futures market right now for the December delivery contract. This market has been in an uptrend for a very long time, bolstered by a rebounding U.S. economy and high-flying corporate earnings reports from American-listed companies. So the price action that we saw on this market in the week prior has been really interesting, where price basically spent the first half of the week creating a pullback into the uptrend, and the later half of the week recovering from it, only just creating a new high for the week as well. So the price action that we saw on this market in the week prior has been really interesting, where price basically spent the first half of the week creating a pullback into the uptrend, and the later half of the week recovering from it, only just creating a new high for the week as well. So let's try and decipher and decode the price action of this market in the last week. So essentially, as the market opened on Monday, we saw price dropping straight through to this former resistance area over here, and as you would expect, price found some support here, came back to it multiple times before eventually breaking straight through it, all the way down to this even more important and critical support area. Now, if you notice the price action that we've seen from the point that price broke out of this area and was heading to this more important 2540-ish longer term support and resistance level, it should ring a bell for you, given what we discussed when we were analyzing the crude oil market. Once again, as price drops into this area, you can see that it was a very, very dominant move, where we had almost no buying at all going on here as price hit this area, and that's one reason why price was able to bounce so precisely and so well off this area. You can see as hard as price drops into this area, it bounces off just as hard as well, which is pretty much the point that we were trying to make when we were examining the sharp move up on the crude oil market heading into the all-important resistance area. So anyways, as price basically bounces right off this area, it once again confronts this shorter term support and resistance level. You can see that it held for a little while as price tried to break through. It eventually was able to do that. Price made a move through. It pulled back to this area and held as support, as you would expect, off of this pin bar looking candlestick, and just continued its way on to make a new high over here. Importantly, as the week closed, we didn't see much resistance coming in here at this point, even though it's like a near all-time high for this market. Even though price was accelerating into this region, which is an important point that we need to consider here from the perspective of where the market could go in the coming weeks. Once again, the upward momentum on this market has been very strong, and just looking by how the market closed here, we could see a temporary hold up over here. Price may go a little sideways at this all-important high, but eventually we're looking at a break to the upside again, and the market to touch maybe the 2600 level and the levels beyond, because the fundamentals are intact we're continuing to see more signs of US economy rebounding, which should pave way for bulls to be dominant for a lot longer. Okay, so the next market we're going to be looking at is the 10-year T-note futures market for the December delivery contract. So this market has been one of the most interesting markets to follow in the last week, simply because where price was when the week opened. So on Monday morning, we have price basically sitting at this very important swing low from the past. And there should have been at least some expectation of a hold up right when the week started. Simply, we were sitting at a very important swing low here. So that's exactly what happened. Price opened, it held a little bit as support here. We continued a little bit higher until we hit the lows here around this mark. Once again, a very important and considerate area of possible resistance for price, and that's exactly what we saw before. We saw price hold up here and then continue its way down. This market has been in a rather dragging kind of a downtrend, and that trend seems to continue going forward. So we have price basically trickle right back down of the 12500 area all the way back down to the support right where the market had opened on Monday, and then continued its way down. The market closed below, price pulled back, held as resistance, and we continued our way down. The rest of the week, we saw price sort of lose momentum and lose its way. At least the sellers lost their way, and we saw some momentum coming in around the 124 area from the bulls as price pulled back again to this important swing low that we've been talking about. And since then, it's just been a back and forth movement for price. The interesting thing is that we closed right at this area again, and that means that as we go into the following week, the open will once again be extremely important and interesting to follow, because we're going to have to see if price is holding as resistance here and continuing either a move down or continue to consolidate like we've seen in the last few days of the prior week, or we're going to be making a move back up. Maybe this area is going to then hold as support, and price will continue its way up to basically indicate either a very deep correction into the downtrend or maybe even a reversal. So that will need to be seen. But for now, we're pretty much on the sidelines with this market. We don't have a bias for this one. We feel that a lot will depend on how the first couple of days of the following week shape up for this market, and that will definitely give a heads up about the market action to follow in the coming days or in the latter days of the following week. So now we're going to be looking at the Euro futures market again for the December delivery contract. This has been again a very interesting market to study, because essentially what we have here is price for quite a while has been oscillating around the 1.18 round number. It's been up and down this area quite a bit, and last week was interesting because we basically saw the first major authoritative move away from the 1.18 round number. This is also a market that's been very interesting on the higher time frames, but before we jump to the higher time frames, let's decode the market action from the prior week, and let's see how price developed. So essentially we started the week off around this area over here, right above a short-term resistance, a short-term support area over here. Price dropped straight into it, found support here, and kind of just lost momentum for a while before finally trickling up and basically hitting this extremely obvious trend line, resistance trend line, and that's where the action basically started off, as price literally plummeted straight through with absolutely no regards to any kind of support areas underneath. So we didn't hold up at this former short-term support area over here. Neither did we hold at this longer-term swing low over here. Price just basically crashed through really easily. Now, if we just jump to the higher time frames, it becomes slightly more clear why we've made such a strong move to the downside. So looking at the daily, we clearly see that we've been in a very obvious head and shoulder reversal pattern. So for the new people viewing this video, this is basically a market pattern where you have the market developing two shoulders and a head over here. It's basically a reversal pattern where price makes a swing high, rebounds, creates a new high, and again loses momentum, drops right back down, and then pulls back basically roughly to the level of the left shoulder, and then continues its way down. The neckline is going to be this area over here, which is basically where both the shoulders find support, and as soon as price breaks through, the general understanding is that price will be able to make a move roughly the length of the head. So if we consider that to be the case here, the theoretical case here, we're basically looking for price to drop down right into this area, and that wouldn't really be a surprise either, because again, this has been a very, very important area, and our long-term bias is again to the downside because of these dynamics that are at play here. But over the short term, if we just go back to the time frame we're on, right? So in the short term, we think we're due for a pullback, and the reason for that is we've been in a downtrend, in a sharp move down for quite a while without a pullback really, and usually, as we've discussed earlier in the video, when you see sharp moves like this, you cannot altogether rule out a sharp move back up. Although the dynamics here clearly point to a downward bias, we still think that this market is due for a pullback, maybe even all the way back up to 1.117-ish area, which would be the lows over here. That would actually be really good for the market, in the sense that any sellers that are looking to get into this move here, they're likely going to be waiting with their sell orders around this area, and maybe even up at these lows. If price pulls back all the way up to these lows over here. So as the market opens on Monday, we're looking for some pullback action on this market, but our long-term bias is definitely to the downside. Okay, so the final market we're going to be looking at for this week is the gold futures December delivery contract, and this has been one market that hasn't had a clear direction for quite some time now. For the most part, we've seen short slingy action on this market, and just a lack of clear, consistent action from one side of the market. So this is a market that you would typically define as range bound or choppy, and this is where it usually gets very hard for new traders to not only find trade setups but also analyze the market in general. So let's try and decode this rather indecisive market as it developed last week. So we basically started the week off over here, just underneath this short-term swing low or support area over here, and as is typical of a range-bound sideways markets like this, price will sometimes respect your short-term and long-term support and resistance areas right down to the tick, and sometimes you'll be left scratching your head wondering why price did not hold a support resistance at an area that could be even obvious. But that's pretty much how a range-bound market is, and that's why it's advised to be careful and just cautious when you're trading a sideways choppy market. So essentially what we had here was price kind of start the week off with a bullish move. We did not find any kind of resistance here from this former support area, and price instead just rather chose to hit this more longer term area here, where we had more evidence of support and resistance in the past, and this is where we basically held up and continued our way down. As price pulled back, we found support at right at the point where we opened the market on Monday, and price basically just bounced off of this area. Once again, not cleanly. Another nightmare of an aspect for new traders trading these sideways markets. Price will sometimes only approximately follow your horizontal support resistance levels, even trend lines and other aspects of support resistance that you may be using for your trading. So again, we just kind of held approximately here at this area and continued our way back up. Once again, hitting this area, rebounding, and this time just passing past the 1275-ish area all the way down to almost this area over here, this important swing low. That's probably where we would say price is headed in the longer term. But just given the choppy action, we're definitely not giving timelines out for that. The important thing out of all of this mess that you can really make out is simply the fact that price is still continuing to make lower lows, as you can see over here, and lower highs, which means that some kind of a downtrend here is dominant. And given how the market unfolds on Monday, we're sitting at a resistance area here. If price decides to respect this and continue its way down, we could eventually see price hitting this area and maybe even continuing its way further down, which would be our bias for this market. Though it's a cautious bias, given the fact that we've been so sideways on this market, but just looking at the dynamics and looking how once again price is trickling and sort of dragging away to this important swing low is kind of an indication for us that price may just continue its way down. It may not be the easiest and the sharpest move down, but eventually price may just end up doing that. So for example, we could see a scenario where price bounces potentially off this area, continues its way down, breaks this prior low over here, pulls back to it, holds as resistance, and just continue its way down, basically underneath this important low. If price is able to do that and really respect the fact that it's broken this area, we could expect prices much lower than where we're currently at. So this pretty much wraps up our weekly roundup of 5 key commodity and futures markets. We're looking forward to your feedback in the comment section below, and also any questions that you may have about the analysis that we've posted.